Well, happy Monday. It's June 10th. Want to bring you the latest data here in the Austin metro area. We're going to start with interest rates. We're then going to look at some national data. We'll bring it back to Austin and see what's happening here locally, and we'll round it out with some economic news from Texas. We'll start with rates. They continue to be pretty volatile. We're still over 7 on the 30-year fixed rate, about 7.15. Some of the other products, VA, FHA, obviously you're getting down into the 6s. If you have really good credit as a first-time home or as a primary home buyer, and you're putting, let's say, 20% down, odds are you're getting a rate in the 6s as well. I want to show you this chart at the bottom. So this is the 30-year fixed rate. This is just going back to March. This is the last time we saw rates in the 6s on this metric. Once we got to April, they shot up. Everybody assumed we were now going to have rates for longer. The inflation data kept coming in hot, so it pushed the rates higher, and they really got high in April. That cooled off the market, which I'll show you in statistics here coming up. But rates have come back down a few times, all the way down to that 7% mark. They're kind of fighting it. So right now they're bouncing off that 7% mark. They're having trouble breaking through. So I would say for now, unless economic data really cools off more or there's some sort of a catalyst that would make rates come down, I would expect we're going to see rates around 7, maybe to 7.25 on average until they cool off. So we'll take a look at that. Let's go to national news. So this is out of Redfin. So this is looking for weeks ending June 2nd. On this box, the metros with the biggest year-over-year increases: Anaheim, California, 17% median sale price. That's amazing. New York, New Jersey, Cleveland, Ohio, Oakland, California. Surprising that even some of the more expensive high tax markets are really seeing a rebound. Metros with the biggest year-over-year decreases. The decreases are not as bad, but Austin still sits at the top, about minus 2.9% on median home price. San Antonio down about 1.2, Fort Worth 1.2, and Portland below as well. This talks about pendings and new listings, but I want to show you the charts because those are always more fun. So this is nationally, okay, looking through June. This dark blue line is this year. So the median sales price nationally is still up about 4.4%. The median asking price is up almost 6%, but as rosy as that sounds, we can already start to see some data that's going to start putting downward pressure on pricing. Homebuyer housing payments are up 8.7%. Look at where they were even in 2021 when the market was going nuts. Average person was probably paying $1,650. Now it's $2,800 and change. So you're talking $1,200 per month more in just 3 years. So that's inflation, and I can't imagine why it's, not going to start having downward pressure on certain buyers in markets like Austin that had seen maybe even more growth in that time. That's why Austin's cooling off, because that mortgage payment really shot through the roof. Austin's already had a pretty sizable correction. We'll see if some of the other markets around the country will follow suit, and we'll start to see their median home prices come back down. But the payments is a big one. But here's where we're starting to see the data come down. Pending sales are down. So in other words, the number of buyers buying homes is coming down. And you can see these were the pandemic numbers, significantly lower, coming down there. New listings, this is sellers listing their homes, is coming down. So we're not seeing as many sellers list their homes nationally. Active listings, though, is climbing through the roof. How does that work? When fewer people are buying, the homes stack up on the market. If supply is outpacing demand, then you're going to have this rise in active listings for homes for sale. We're still very healthy in terms of number of homes for sale. Nationally, only about 3.2 months. In Austin, it's over 5 months of inventory, but nationally about 3.2 months, but climbing. And you can see it's significantly over where we were during the pandemic. This tracks how quickly homes sell, how many are going under contract within just 2 weeks. It's much lower, obviously, than we saw in the pandemic. Still decent, over 40%. So nationally, there's still a lot of markets with tight supply. But as that loosens up, you'll see that number continue to drop. Median home is being sold in 32 days, still very fast nationally, but again, higher than we've seen during the pandemic. 32% of homes nationally are sold above the final list price. That's way below the pandemic, which was over 50%. Now it's down around 30% and starting to flatline. Price drops, look at that. There you go. So that's future sales. These are sellers having more trouble selling their homes. And this is just a 4-week average. In Austin, we're seeing typically about 10% of homes per week are doing a price reduction. So we're seeing more price reduction in Austin. Average home is being sold pretty close to list price, but again, that's obviously way below the pandemic. More healthy, normal market. Some are going to sell over, some will sell at, some will sell below. You average it out. It's close to list price. So that is national. Let's look at what's going on an Austin level. So this is looking at May activity. This is number of homes that are going pending. You can see it's going up a little, but our normal spring rocket up really flatlined off when we got those higher interest rates. And now we can see it through May that it really tapered off. So we are below all the previous years other than 2020 when we had COVID hit. All the other previous years were significantly lower in number of pending home sales. So units are down, sold about 15% from May of last year. Average sales price flat with last year. Days on market is down, ironically, in May a little bit, but the median sales price is also down about 1.5%. So not a huge change from last year, fairly flat, but those high interest rates put downward pressure on more buyer activity in the market. As I come down to year over year, so this is looking at all of 2023 through this date and all of 2024 through this date. So total sales, pretty equivalent. We're down only 0.3%. Again, average sales price up about 0.5%. Days on market are up almost a week. Median sales price down about 1%. So we're pretty trending with last year. So Austin maybe has had most of its correction. We'll see. But inventory is going to dictate, I think, some softening pricing maybe later this year. We'll see if buyer demand can pick up. But in terms of inventory, we have 14,000 active homes for sale. At this time last year, we had 10,500. So we have 2,500 more homes for sale at this time than we did at this time last year. If you look back in the pandemic at this time, we had 2,500 homes for sale. So we are 6-7 times more homes for sale than we had then. And even back in 2010, we had 12,500. Now we have 14,000. So we have more homes for sale now than during the last recession. However, I like to caveat that with we are also a much bigger metro than we were 14 years ago. We've probably added another, 600,000 or 700,000 people and built a ton of homes. So there is going to be more supply in the market naturally. Let's look at this chart. This is active versus sold listings. Let's see if I can zoom that up for you a little bit. There we go. So this is real inventory right now. I would ignore this June bar on the far right because that's going to change as we get through the month. But if I look at January through now, again, this is just single family homes. I weeded out everything else. So just single families, but it gives you a good idea how fast that supply has been building up over the spring. This is our peak last year in September. This was 11,500. Just on single families, we're now sitting at 12,900. So we're 1,400 more single family homes for sale, and we're still barely in June, not September. So I think over the summer, we're going to continue maybe to see this go up, but we'll see. Maybe fewer people choose to sell. Maybe some more buyers come into the market as we get into summer, and it'll start changing those numbers. And then again, high interest rates. You can see the blue line did not keep pace with the supply growth. It kind of flats a little bit here, March, April, May, as we had fewer buyers putting properties under contract. If we come back to, let's see, where am I going here? Let's see if I can get back into here. There we go. This is original price versus sold price. Okay, I'm going to see if I can zoom that up for you too. There we go. So the green is what the original asking prices in the market are. Blue is what they're ultimately selling for. And you can see as people get kind of optimistic, you're going to get these bigger gaps. Sellers are asking for more money. They think the market's going up. They have some comps maybe to support that. But the buyers, they weren't really offering a whole lot more. As rates went up and the sales kind of flattened, you can see now we're seeing downward list price, original list price pressure. with more supply, more inventory, sellers are getting the message, hey, I can't ask too much. I've got to be competitive. I can see what's happening in the market. So that's original price versus sold price. Finally, this is a report on the Texas economy. It's not all bad news. Texas is on fire in terms of GDP. This is 2023 growth versus 2022. Texas is almost leading the nation. North Dakota had a 5.9% GDP growth, but Texas, way bigger, had 5.7, way outpacing New York, California, even Florida. Florida was hot with 5%, but Texas just red hot in terms of jobs, in terms of company growth, GDP. We're in energy, we're in tech, we're in all kinds of industries, and Texas is really leading the way. So if you are a seller right now, this is your story. We've got to be really competitive on list price. We have to be patient because the market just does not have a lot of buyer demand right now. We'll see again. I think rate story is going to drive some of that. But as we get more supply, you may see some more buyers see opportunities and come into the market. But as a seller, I would expect we have about 5 months of inventory. I always think a typical house is going to sell in about half that speed. So that means 2.5 months on average for most sellers to get your contract and get that house under contract. If you're a buyer right now, look, the rates are going to be what they are. They're not going to move that much. But the one good news about that is you have some consistency, I think, to at least understand what your mortgage payment's going to be. And you have more supply than anybody's had in a while. So I would say if you want to have the opportunity to talk with sellers, to negotiate, and to get a home without a lot of competition, it's probably now. As rates, if they come down at some point in the future, I think that's what's going to spur more buyers into the market. You may miss that window. So anyways, if you want to follow all of our videos, check out our YouTube channel at Ryan Kelly Group. Click that subscribe button. You will get these videos each and every Monday. And of course, if you're looking to buy, sell, or invest in Austin, we'd love to go have a deeper conversation with you and tell you what's happening in the market. Until then, we've got a little cloudy day, not too bad. Temperatures are only going to be in the mid 90s, which for Austin is great. Hope you guys are enjoying your summer, and we'll talk to you next Monday. Thanks.